Americans are increasingly turning to credit cards as their savings dry up after the pandemic. Construction activity and home sales have slowed, manufacturing output fell together with retail sales, and the housing sector and business investment continue to tumble. The remaining question is, will the US economic resilience continue in 2023 in the face of global and domestic challenges?
Hi, I'm your host, Weronika. Welcome to our new series, Weekly News, where we're going to provide you with relevant financial and business news from our daily newsletter, We Study Markets, including insights from iconic investors and billionaires. The Eurozone's economy outperformed China and the US in 2022. What is the economic forecast for 2023? The US economy marks growth. It has been resilient so far, but will the resilience continue in 2023? The selloff in the Adani Group Stocks wipes out $47 billion in market value. Will family-controlled conglomerates continue to be untouchable? Investing in farmland. Why Warren Buffett would rather own all the farmland in the US than all the gold in the world.
The Eurozone's economy outperforms China and the US in 2022. What is the economic forecast for 2023? Eurozone's economy exceeded expectations and surpassed that of China and the US in 2022. Figures released by the European Union Statistics Agency, the currency area's economy grew at an annualized rate of 0.5% as higher energy costs weighed on household spending, translating into 3.5% growth in GDP for 2022, a faster rate than seen either in China or the US. The last time the Eurozone economy as a whole outperformed China and the US was in 1974. For decades, the world has seen China, US, and Eurozone as the three major engines of the global economy. However, the impact of the pandemic on the world economy resulted in a shift of the ongoing growth patterns. The US economy noted 2.1% growth in 2022, a slowdown from 5.7% in 2021. Meanwhile, China's economy grew by 3%, down from 8% the previous year. The unusual growth ranking of the Eurozone economy was primarily caused by COVID-19 pandemic. As China imposed several lockdowns to pursue its zero-COVID policy, the US reopened more fully in early 2021, outpacing the Eurozone and China the first 3 months of the year in particular. The Eurozone's momentum, on the other hand, started later in 2021, but it carried over into 2022 without tight restrictions, leading to its key tourism industry's rebound. According to the United Nations, China's economy is expected to grow by 4.8%, while the US and the Eurozone are expected to slow down to 0.4% and 0.2% respectively. The usual growth ranking is expected to be restored by 2024, at lower rates of growth. In conclusion, 2022 was an unusual year, but by 2024, the impact of the pandemic is set to weaken, and inflation rates are expected to fade. Though the future holds more promising prospects for the world economy as supply chains slowly return to pre-pandemic conditions, on the other hand, they are still relatively unstable, taking into consideration the current disruptions we've seen over the last year, including Russia's invasion of Ukraine, one of the world's largest wheat and fertilizer producers. Speaking of, the US economy marks growth. It has been resilient so far, but will the resilience continue in 2023? Americans are increasingly turning to credit cards as their savings dry up after the pandemic. Construction activity and home sales have slowed, manufacturing output fell together with retail sales, and the housing sector and business investment continue to tumble. All of that taking place while tech giants like Google, Amazon, Salesforce, or IBM have announced thousands of layoffs in recent weeks, raising concerns about whether other industries will follow this trend, which will influence thousands of American households. What does it mean for the US economy? Although the recovery from the pandemic recession has cooled from the insane pace of 2021, it still has remained resilient in the face of war in Europe, inflation around the world, and an aggressive series of interest rate increases by the Federal Reserve. According to the Commerce Department, the US economy grew at an annual rate of 2.9% in the fourth quarter. Economic activity at the end of 2022 showed the resilience of American consumers and businesses despite rising inflation and interest rates. Adjusted for inflation, the US gross domestic product was down slightly from a 3.2% growth rate in the third quarter, and consumer spending grew at 2.1%. Economic output contracted in the first half of 2022, inducing talk of a recession, but then rebounded. Over the year, GDP grew 1%, down sharply from 5.7% in 2021. As the chief US economist for Bank of America said, the economy continued to motor on, and there is more momentum in the economy at year-end than we thought, and a lot of that is from households. The remaining question is, will the US economic resilience continue in 2023 in the face of global and domestic challenges?
The biggest challenge to taking control of your personal finances, improving your investment returns, and building a better future is just getting started. This means getting organized, having a plan, and being disciplined. As Mark Twain once said, the secret to getting ahead is getting started. To break out the treadmill of slaving away each week only to have nothing left over, watching the savings you do have to get eroded away by inflation's vicious bite, or freeing yourself from the corporate grind requires that you master the conversion of time into value. To help you do this, we created a list of 4 simple steps to take control of your personal finances and life. You can download it for free by clicking the link in today's description. Alright, back to the news. The sell-off in the Adani Group Stocks wipes out $47 billion in market value. Will family-controlled conglomerates continue to be untouchable? Shares of several companies linked to the India's richest man, Gautam Adani, fell dramatically after a US short seller, Hindenburg Research, published a report alleging fraud at the Indian billionaire's conglomerate. Adani's business empire includes assets such as airports, renewable energy projects, coal mines, and ports, making him one of the world's richest men. 5 out of 7 listed companies of Adani Group fell 60% to 20%, while the other 2 fell by the maximum 5% allowed by India's exchanges for their stocks. The Nifty 50 index, which includes 2 Adani companies, also fell to a 3-month low.
Adani Group has called Hindenburg's fraud allegations baseless and accused the short seller of trying to smear its reputation and disrupt a public stock offering by one of its companies. They are considering legal action against the US firm as they claim that the volatility in India's stock market created by the Hindenburg's report has led to an unwanted anguish for Indian citizens. Some market participants blamed the sell-off partly on a tweet by US hedge fund manager and another high-profile short seller, Bill Ackman, who expressed support for Hindenburg publicly. The whole situation is even more disturbing, taking into consideration that Adani Enterprises, the group's flagship company, was in the process of raising $2.5 billion through a follow-on public share sale that opened the offering to individual investors in the country. This scandal raises questions about the dominance of family-controlled conglomerates in the Indian corporate sector, and many are now questioning the untouchable status of Adani and his businesses.
Investing in farmland. Why Warren Buffett would rather own all the farmland in the US than all the gold in the world? Farmland isn't the first place investors look to when trying to maximize returns or diversify their portfolios, but yet, with billionaires like Bill Gates snatching up hundreds of thousands of acres, there must be a pretty solid reason for interest in this multi-trillion-dollar asset class. Carter Malloy, the CEO of Acre Trader, says that one of the reasons that farmland has always been attractive is that it can serve as a hedge against inflation, simply because it produces one of the core components of inflation statistics: food. Let's hear why is it worth diversifying into farmland when you're worried about inflation.
First, to establish, it is a large asset class. There's $3 trillion of this stuff in the United States. So it is a very big asset class. And you're exactly right. I think most people are stock investors first and foremost. I personally, that's my background. I spent a dozen years in equities, most recently in a long short fund. And I love investing in equities. But in the background, I've been buying and selling farmland. My dad's a farmer, mom entrepreneur, and always was just intrigued by farmland, the financial performance, despite the really difficult transaction experiences that are out there. But one of the reasons that it has always been attractive, I believe will remain so, is that it can serve as a hedge against inflation. And the reason is fairly simple. It produces a core component of inflation. Food comes off of farmland. That's one of the ways that we measure inflation. So over time, the data will show you that farmland has actually served as a similar, if not better, hedge to inflation than gold. Difference with farmland and gold is that farmland produces income as well. Gold does not produce income. You're holding a commodity and hoping somebody else is willing to pay more than you did for it. With farmland, it is an actual productive asset that produces rents for the investor. Importantly, while it can serve as a great inflation hedge, and again, the historical data will show you that, it is a really fascinating standalone investment, right? So the underlying reasons to invest in farmland, the list is long. There are a myriad of reasons to invest, including it's not really diversified to other asset classes. It has put up some really great historical risk-adjusted returns, right? So low double-digit type of returns with low volatility as well. So you don't see it whip around like a lot of other asset classes, including stocks. So there are a lot of really great standalone reasons to invest in farmland. And oh, hey, by the way, it can also serve as an inflation hedge.
That's it for today's news. Remember to subscribe to our daily newsletter, We Study Markets, by clicking the first link in the description below. And subscribe to our channel. Thank you for watching.
The US hits its borrowing limit while the Treasury takes extraordinary measures to avoid default. But congressional Republicans and the White House are drawing battle lines in the increasingly risky debt ceiling debate, with both sides seemingly only becoming more entrenched.